Hi, Andrew Cooper, Advice for Living Financial Planning in Diamond Creek. I should tell you in advance that this message is a little longer than normal. There's some recent issues I wanted to report on and also give a bit of a review of the year and then talk about a couple of things that will be happening next year. So if 6 minutes of me on the video is too much for you, then there is a text version of this, or alternately you can just hit the delete key right now. Financial markets have been delivered what looks to be two very timely Christmas presents. The Americans and the Chinese appear to have struck a first stage deal that will increase trade and hold off the imposition of further tariffs. So that's great news. Secondly, as I'm sure you're all aware, Boris Johnson and the Conservatives won an overwhelming majority in the UK election late last week. All Conservative candidates were required to sign an undertaking in advance of the election that they would support the BREXIT legislation. And so we should expect that when their Parliament meets later this week, that legislation will pass the House of Commons with very little trouble at all. So regardless of which side of the debate you are on, financial markets hate uncertainty, and for better or for worse, we now know what's going to happen with Britain, and as a result, markets have responded positively already. Their share market is up, and so is the pound. This is great news, unless of course you're going to Britain for Christmas, in which case it will cost you more. Sorry about that. Against this positive news, there continues to be a number of commentators suggesting anything between a minor correction and a recession. On the other hand, with cash rates for things such as term deposits and home loans remaining stubbornly low, and with expectations that this will be the case for some years to come, there is an alternative view that the high prices for shares are the new normal. And I know I've talked about this before. My personal view is that although shares in some markets do seem to be reasonably expensive, I suspect that many investors have been prepared to push up the price of shares and receive the proportionately lower returns that means, rather than lock themselves into guaranteed low returns from cash and similar products. As a result, I believe next year we might see more moderate returns compared to what we've seen this year, which of course has been a bumper year for returns in almost all markets. Is there a possibility of a downturn in markets next year? Look, there is some possibility. What I'm not seeing though is a major recession. Markets don't seem to have gotten too far ahead of themselves, and so if there is some sort of correction next year, I'm expecting it will be relatively mild. This is of course unless something completely unforeseen happens. But then again, if we look back on this year, you could easily have thought that the confusion caused by Brexit mess and the US-China trade arrangements could have created enormous difficulties for financial markets. And yet, as I've said, we've had an enormous return this year from almost all markets. If there is some sort of a correction next year, my message to our ongoing clients is to stay the course. Don't panic. The portfolios we've recommended for you take into account your personal approach to risk, your financial objectives, and whether you're building for retirement or you're in retirement and drawing down on your pension. For those of you who are building, if there is a correction, then your funds will have plenty of time to recover. For those of you who are in pension, we've created cash buckets inside your products to give you a couple of years of pension payments, so that if there is some sort of correction in the markets, again, your growth funds will have time to recover. So just once again, if there is some sort of downturn in the markets next year, remember that you have had very good returns over the last 10 years, and it may be that you've got to give a little bit of this back, but hopefully only in the short term, and so don't panic. On a cheerier note, Alison and I and the team here at Advice for Living would like to wish you all the very best for a lovely Christmas, a happy new year, and a rich and fulfilling 2020. At the office here, we'll be closing this coming Friday after lunch, and we'll be reopening the office on Monday the 20th of January at least. Sorry, not 20th of March, Monday the 20th of January. Now, this is slightly longer a break for us than normal. However, as of the 1st of January, there's a whole range of new rules and requirements that come into place for financial planners, and we need to spend a few days getting our systems ready and coming to grips with what we will need to do differently. and you'll see as we deal with you next year that there will be changes to a number of our requirements, and so we need to just get ready for all that. Having said that, even though the office will be closed, we will be around and we'll be keeping an eye on our emails and our phone calls, so if there is anything, then please don't hesitate. As usual, if you've got any concerns or questions, then please contact us. And again, if there is anyone who you think may be interested in this information, then please pass it on to them. And if you think they would benefit from a meeting with us, then we'd be very happy to do that. Again, Merry Christmas, and we look forward to seeing you next year.